This is Justin Pulitzer. This is my weekend video ending for the week of September 28th, 2014. I'm going to dive right into the charts, and we're going to start with the S&P 500 ETF, the SPY. So if you take a look what happened here, we had made a high, and we were grinding and chopping our way lower. This was really forcing action. You could see it would keep popping back up, put in some bottoming action here around the previous breakout zone and old reference highs. We did come below them a little bit, but we held in the breakout zone. And then here you had a Chinese liquidity event where they injected some liquidity, came up really strong here with this huge engulfing bar and closed up over the downtrend line. The next day, though, we had the Fed, and that bar closed with some indecision. It closed right up near the highs of the previous day. So in the context of this bar, this doji was still fairly bullish. And you could see even after that, we did come up to retest the old high. A lot of people were very wary. This is a very responsive market. People are always trying to be the geniuses that sell the top and don't want to be the suckers that buy the top or what have you. So we came back down pretty hard. We did stop here on the 20, but then knifed through it, came back down through these lows to retest the 50 MA. This was pretty bearish sentiment. I think a lot of people got themselves overly extended short seeing this break. And then the next day we had this really, really big engulfing candle. I had talked about playing this long. You know, a first test of a 50 MA rarely breaks. With sustainable action here, you can see we tested below it intraday, but we did come back up pretty strong. But look where we stopped. We stopped at the backside of the secondary uptrend line and basically near the lows of the Fed day. I had talked about in real time in day trading to take some profits there to book. And you could see the next day we had this really, really bearish big, basically they sold it right off the open in a straight line down, and we just chopped around the lows all day. We basically opened up here at the high and then sold off and closed basically at the low. Took out the 50, but got to the 50% Fibonacci level. And then you could see Friday we had a bounce up. We still didn't take out the downtrend line, but we basically closed right being near the 50-day moving average and just under the bodies of these candles. So in context, Friday's action is a little bit more bearish. My thinking though is that next week we're gonna have a setup either way. I think that if we lose this low here, this big candle here, because there really was no excess, it kind of was a bit of a flat bottom, which just to me means that a lot of people were probably dumping and trying to short late in the day, and then they didn't get rewarded for it on Friday, and we rallied back up. If we lose this low here, I'm thinking we come back down for sure to test the 100 MA, but more than likely also to test this primary trend line and also the 61.8 fib, which is around 194.89, so close to 195, let's call it. If we get around there, I'm thinking it's a buy for a bounce back up, and we'll do some fib analysis on that. I'll post on the channel on my Twitter stream during the week. But I'm thinking down here, it's probably a short below here, down to here, and then reverse long for a rally back up, maybe to the downtrend line. If, however, we do wind up rallying in early in the week or whenever, and we happen to get above this big dump day, if we could take back 100% of this move, which would be over 199.05, so let's say 199.06 because that was the old high here. If we can get back up over there, I'm thinking the market is kind of showing it that there are buyers, and we probably will move back up into this range close to retest the 200 again, and probably the backside of this line again. I don't think there would be too much super duper resistance up there because you would have already had a pretty big liquidation here and taken out a lot of stops. So I'm thinking if that does happen, we could possibly retest the old high again. But we really would have to see a retaking of this bar here, this big dump day, and to get back up over these old highs. If that happens, then we probably would come up and do something like this, come up, like list a little bit higher. If we do come down though below here, we're looking for that buy. So those are that's the real, this day here, this big reversal bar is the key. Above there to me is more bullish, below there is more bearish. But in the context of this setup where we'd be looking to buy the 61.8 for a right out type of a play. If you take a look at the IWM, which I know a lot of the TV talking heads are saying is the canary in the coal mine, there may be something to it. If you take a look, let me just put this in context for you guys. If you take a look at like a 2-year chart, let's do a weekly so it's not like crazy. All right, so if you take a look at this, this IWM chart has been really just chopping in this really big sideways lateral range, and it came up here for a bit of a double top, and then it's sort of been banging against these lows for double bottoms, and then since then, more recently, let's go back into a more 6-month daily chart. We've been making higher lows and lower highs, and I had said in last week's video that a move over this line here would probably be either to fill up the triangle this way, or a break below here would be to fill up the triangle that way. I still think that that's the case here. The key here now is if this low is taken again. You can see, look, we came down here, we stopped basically right on the line, we tried to rally back up, and then had this big reversal day. That was the reversal day. And then Friday we kind of just closed up back up below the trend, this line. So I'm thinking IWM you can be short for a move down to this 107.44 level. Although if we do get back up over this area here, I think you'd have to kind of negate that and look for a short off of the downtrend. It may be a failure this way, and then it may want to kind of test up above here and be a real head fake. But I'm thinking IWM, I had said anything below here would be a move to fill up the triangle. I don't want to change that. So I still think IWM is short until it can prove itself that it can get back up over this level, these levels. And I would think the first key is really the reversal day. Let's just call it the next day because those highs are pretty close. Like 112.11, somewhere, if you can get back up above 111.83 to 112.11, I would say that the short is sort of negating itself. But anywhere below this line here is definitely still bearish, and the rallies here for me would be sales for a look of that filling up of that triangle. So let's keep our eye on that for early next week. Apple has been was pretty choppy the last few days. It's been in this defined channel that I had drawn, and I had discussed that it was in a bit of a downtrend and we haven't been making new highs, and that it really needed to take this bar here, this big reversal bar, to get bullish again, and the high of that bar was 103.20. You can see we got really close a couple of times, but discipline trumps conviction, and that wound up working because look what happened here. You came back down pretty hard to test into those 97s like I had discussed, broke the 50, but the next day, Friday, closed really strong. You did take back 100% of this bar, and you did actually close back up over the 20. And I think that when Momo stocks close over their 20-day moving averages, they're bullish. So Apple may have some room back up even into this into the middle of this range, which would coincide nicely with the downtrend line. My thinking here with Apple is if this happens to get taken again, if this goes down again, we're going to come back down here to test the 95s for sure. That's a 100-day moving average, and it's also a 61.8 fib. And these lows here had already been tested and probably won't be as strong the second time around. So keep that in mind. If that happens to give, if this doesn't hold, we'll reevaluate with some more levels. You can see I have some other fibs on some longer time frames that would come into play. But as of now, I'm thinking this should hold here if Apple is going to stay healthy, and if not, we'll come back down to test here. If we do happen to get back up over this downtrend line, my thinking is that we probably would come back up to fill up this triangle here and to retest the old highs and maybe even test the upper part of the channel. I think if you take this whole old high, this 103.79, it opens the door to 109. I don't think that will happen right away. I think it'll be a choppy process where we'd come up and then probably chop in the middle of the channel and then kind of just ride this channel up higher into earnings. My fantasy here is sort of like that Apple does come down and overcorrects ahead of the earnings, and then it would set up as a buy for the earnings. I know just from anecdotal evidence, I've been to the Apple store a couple of times. I had originally bought the new iPhone, the 6 Plus. It was a little bit big for me. I just returned it for the 6. But there have been lines out of that place for no more than an hour long. Even over the weekend, I saw this. It's absolutely incredible, the demand for the new phones. I think they're going to exceed they should have a pretty good number. And my thinking is that Apple would be a buy for earnings if it is weak. If it does come in strong and we're up here riding the upper side of the channel, I think that'll be a sell the news and we'll probably come back down. So it's going to kind of be like a do the opposite, like a George Costanza type of move. Facebook has been an absolute beast. take a look at this sucker. They did get it down here, but look at what happened, man. This thing hit the 50 and just absolutely reversed to make new highs. It did have a little bit of a responsive sale, but then on Friday, back up to the highs. I still think this is a buy the dip stock. I'm a fairly decent size fan of Facebook. Again, the caveat is it has to stay for the first, for the important thing, the earnings gap high, you have to stay over 76, 74. If we lose that, then we look to this trend. If that gets lost here and we happen to start losing the 50-day moving average, there's risk that this triangle fills up down to the lower part and we retest the lower 70s. I would think that's a buy because you have these trend lines aggressively moving up, and I would think that supports for a buy if it did come back down there. But I'm still fairly constructive on Facebook. I think it's working. It's working. And when stocks work, they continue to work. It's just sort of how it is. When stocks don't work, they continue not to work, and when they work, they continue to work. If that makes sense. Google, I had been looking at. This has been a bit of a mess, right? This chart. It's been strong. It's been making higher lows. Then here you came back down to make equal lows, but then came back up and made a higher high. It's been making higher highs. And then this last week, it got really choppy. You kind of have been breaking and going back over the 50-day moving average. Friday was a little bit lackluster to me. You rallied up to the 50 and then still closed below here. So I'm still in a little bit of caution mode with Google. This chart to me is a little bit more messy and it's not as clear. I do think if it did come down, you'd probably have some support here on the 100-day moving average and the 200, wherever that moved up to, and that would be a buy for a trade. But if we can come back up over the trend line, it's probably just going to be chop in this range, and maybe you get some resolution for earnings. But it just seems like a bit of a stalemate here between buyers and sellers. It's just like this choppy mess. So Google is a little bit less clear here. Another one that has been pretty big on my stream this week is this GoPro. This thing is an absolute monster. I think some hedge fund blew up this week, or they were trying to short it, and that's probably what caused this spike. The reason why really doesn't matter so much. I mean, if you take a look, this was the IPO range. Once you came back up over that, there was no looking back. You went to the first Fibonacci extension, 161.8. You came up here, then you went through it, had a little bit of a reversal bar, but then I think the short interest just took over at this point, and you've just been knifing your way up here to the 261.8. I think the 84 level, maybe you get a little bit above it, or a little bit. This to me is starting to get really extended. I mean, you did Friday, you did wind up getting up and making a new high, but I mean, I can't really conscionably say that this is a buy. I mean, the stock is really, really extended. I think that for me personally, if I were to want to be getting long and to be involved, I would be looking for some type of a move back to the 20-day, the rising 20 for a day trade, and then buy it off the 20 for a bit of a bounce. Anything over this reversal bar, though, is still kind of bullish, this 68.29. That would be my first target. I actually have a short ratio on for this week, and it didn't cost me anything to put on, but it would make me. I wouldn't lose any money if the stock continues to go up. If it comes back down, I'd start making some money below 71. I think it's 71.5. I'd have to check, and then the short strikes are like around the 67. So that's sort of what I'm thinking. If we do come back down here, we'd probably stop at the 20. So GoPro, I can't really say it's a short, but just because there's no reversal here for a signal. If you want, you could kind of test your luck here at this 84s, because that's the 261.8 fib level, and I would think that at that point there might be some interested sellers. But this chart, the stock's bullish. I mean, it's hard to dislike a stock that's making new highs. For me, again, not a chase. I'm definitely not initiating longs here. I'd be a buyer for the day trade here. And if we started to really, if GoPro really starts to lose it, I would think that it would probably make it, if it breaks these levels, we'd probably come down to retest this primary trend line, where it would probably be a buy again, frankly. I mean, this is significantly lower, obviously, but that to me, the stock is really young. For me to be involved, it needs to have some reference lows. So maybe if you came back down to here, like I said, for the 20, or maybe if it really gets itself extended back, and makes a move down to the lows, maybe the IPO high. I don't really like trading these young stocks. I know everyone who's a banger loves to be involved with them. For me, the play is just to try to play it with some ratio spreads, either up or down. Price line is one I do happen to like to play, and I've been waiting for this sucker to set up for a really strong buy, for a bounce down here around these old lows, around the 1087. You can see we came back down here, we were making a series of highs. This was the earnings, and it just reversed itself, and you broke this uptrend line back down here, and now you're kind of tried to rally back up to it. It didn't even make it that high. It failed, and it's just been in this bear flag. So I'm watching for this thing to either come back up to the downtrend line for a short, or to play for a long down here at the 1087. If you do break the downtrend line and get back up into here, I would not fade it so fast, because this stock tends to like to move, and you'd probably catch a lot of people off guard who were short, and they'd have to cover. But my thinking with Priceline is I'd like to really buy it around closer to the 1100, the 1087 level. That to me would be a great buy from this reference low, and you'd probably get a rally back up, maybe back to this old low here. And that's a pretty big swath. You could clear a nice 39 points or so. That's Priceline. Let's take a look at BABA quickly. Actually, I meant to do that earlier. For me, this is again, a stock that hasn't been trading very long. It's just been in this kind of chop range with the IPO. I think that it had come public at 92.70. So my thinking is if we do get back up there, it might be an intraday day trade short for a little bit of a back off for people who are made whole off this, and that's my thinking with BABA. I would really be interested in BABA if it came back down to that offering range of 68, and pulled like a Facebook or one of these type of moves where it just absolutely gets slammed on the IPO, and you take out all that froth, and then you get a chance to buy it there. I think that the syndicate would defend it at that point. If you take a look though on a shorter time frame, let's take a look on a daily. If we go into a 10-day, I hadn't really even planned on discussing this stock, but I figure I will because I know there's so much interest in it. This spike is really tough because you kind of came down really quickly, but I would be keeping my eye on this thing if you can break, let's say this trend. If you went from here to here and extend to the right, yeah, you see we're coming back up here, so you might even be looking, if you want to play this thing long, if you can get this thing up over the 91, like the 91.5, you might get a move back up here if you want to play it long. My thinking though is I'd still be looking for this as a responsive play, as a more of a short, even at 92.70 for a pullback. But BABA again, let's just keep our eye on that. And I have alerts set for 68 if that ever does happen to get there. Tesla, this is really what I wanted to talk to you about. I got a little bit distracted with BABA. That was sort of on the cuff, off the cuff. All right, so Tesla, I had discussed actually this thing being a sale up at 190, and I did this in real time, and the stock actually did come back up and did get a little bit higher, and I had said that this was kind of looking bullish, that it was just in this bull flag up here, and unfortunately it didn't resolve. I was sort of looking for it as a buy up over here for a move back up for the highs and maybe new highs, but that never triggered, and what we did get is we had the Morgan Stanley upgrade, and then they kind of turncoated on it and did a downgrade, and then you see we stopped right here on this secondary trend, came back up to retest the old high of the 265, which I had said was a play for a bounce, and then to sell, and we came back down here and retook this low, which is really bearish in my opinion, and then we came back down here to retest this old breakout point, and we've just been kind of listing below this secondary trend, and there's been no strength even with the market rally. So what I'm thinking with Tesla is that you may even be able to play it as a short below the 244.71, but really in the context, I'd be looking more to buy it, honestly, down here, somewhere around this 100-day moving average and somewhere around this primary trend line, which comes in somewhere around, let's see, the 134. So somewhere between 134 and, like, let's say like 130s, like 137.70ish, whatever this is, wherever this trend line happens to be when it comes down. I'd be looking to buy that for a bounce. Tesla, is a momentum stock. These are usually better to buy when they're sort of have some type of a catalyst, and I would think it will respond well down here somewhere on the primary trend line. So that's my thinking with Tesla. If you want to play it really short term, you can play it on a break of this reversal hammer of the 244.71, or play it long down here. So that's my video for the week. If you guys have any questions, please feel free to email me, or better yet, actually, just tweet me. My handle is @JustinPulitzer. I respond on there, and if you like this video, please be sure to like it. Thank you.